Do I see Deb somewhere? Or is she on the phone? Oh, there she is. Perfect. So this is the management committee meeting for Wednesday, May 12th. We are calling this meeting to order. We are still working under the governor's emergency order due to the COVID-19 virus, which is causing us to have this meeting virtually. It's Executive Order 20-01. If the public would like to comment on anything that we're discussing in the meeting, they can send us an email at public.info@metc.state.mn.us, and we will respond to those comments in a timely manner. And the meeting is being recorded and broadcast as well. So with that, can we do a roll call to see if we have quorum, please?
Barber. She already told me in the chat that she is here. Thank you. Gonzalez.
Present.
Lee.
Present.
Muse.
Here.
Ferguson.
Here.
Thank you.
Thank you. Are there any changes to the agenda that people see? All right, seeing none, then can we get a motion to approve the minutes of the April 28th Management Committee?
Moved by Barber.
Is there a second?
Second by Gonzalez.
Moved by Barber, seconded by Councilmember Gonzalez. Is there any discussion or changes? All right, can we call the roll?
Barber. Aye. Gonzalez.
Aye.
Lee.
Aye.
Muse.
Aye.
Ferguson.
Aye.
Thank you.
And the motion carries. Our first business item for the day is 2021-110, the American Federation of State, County, Municipal Employees, District 5, Union Local 668 Labor Agreement. Marcy?
Good afternoon, Mr. Chair and committee members. Yes, I'm happy to report that we have reached a tentative agreement with our AFSCME bargaining unit. Their contract expired on December 31st. We reached the agreement on April 21st, and the union ratified with a large majority of members approving on April 29. The highlights of our agreement in terms of the economics, it's the established pattern, which is a 3-year agreement. Year 1, a 2% increase with a 1.5% performance pool. Year 2, a 2% increase with a 1.5% performance pool, and year 3, a 2.5% general increase with a 1.5% performance pool. We also reached, in terms of a couple of highlights on what we might call language or non-economic items. We made some changes to the language on voting leave to make us more consistent with the state statute. And we did obtain some language as the employer that is allowing more flexibility for human resources in the management of eligibility lists. So we're pleased about that as well. With regard to the Thrive lens analysis, under stewardship, the settlement falls within the financial parameters established by council. And prosperity, we believe the agreement represents a fair and reasonable wage settlement and demonstrates the council's commitment to its employees. So our request today is approval of authorization for the regional administrator to enter into an agreement with AFSCME District Council 5, Local 668, effective for the period January 1, 2021 through December 31st, 2023.
Are there any questions for presenter? All right, seeing none, is there a motion to approve business item 2021-110?
Move by Lee.
Is there a second?
Second by Barber.
The motion been moved by Lee, seconded by Barber. Is there any other discussion? All right, seeing none, can we call the roll, please?
Barber. Aye. Gonzalez.
Aye.
Lee.
Aye.
Musse.
Aye.
Ferguson.
Aye.
Thank you.
Thank you, and the motion carries. Thank you, Marcy. The
Thank
second business item that we have is 2021-111, Railroad Liability Insurance for Northstar Operations. Phil Walljasper.
Thank you, Mr. Chair. Good afternoon. Good afternoon, committee members. This business item is seeking council authorization to renew its railroad liability insurance related to the Northstar commuter rail operations in an amount not to exceed $2,500,000 effective June of this year to June of next year. The insurance is a contractual requirement pursuant to our agreements with Burlington Northern. We have several agreements with them related to the Northstar operations. And the limit of insurance that we need to get is tied to the federal passenger rail liability cap, which is currently $323 million per occurrence. So as I've mentioned to this committee before in previous renewal presentations, whenever we get insurance at that limit, that high of a limit, several different insurance companies are utilized, with each one of those insurance companies providing a layer of insurance. Oftentimes those layers of insurance are referred to as a tower. So what we do when we market this program is we go out and present our operations and our program to several different insurance companies, several different underwriters, to see, number one, who wants to participate and who's capable of participating in the tower, but also who's capable of participating at that lead layer. And that's especially important because the lead layer establishes the pricing that we use to negotiate for the rest of the layers, but also the coverage, and that carries up through the tower. So with this renewal, we presented to several different carriers. AXA XL came back as the most competitive quote for that lead layer. They've been our lead carrier for several years. They know our operations well. They can provide the necessary coverage pursuant to the contracts that we have with BN. And we use that to continue to negotiate for the rest of the tower. So right now we're in a position where we know that the not to exceed amount is going to be the 2.5 million, but we're continuing to negotiate pricing for some of those upper layers of insurance. So with that, Mr. Chair, I would be happy to answer any questions that you might have.
Are there any questions for the presenter?
I have a quick question.
Councilmember Gonzalez.
I was just wondering if the $2.5 million amount, is that a change from the last time? Has that amount increased? Did we have any savings, or how's the price stability in this type of insurance?
Mr. Chair and committee members, I reported last year, you may recall, with the insurance that the insurance market was incredibly challenging.
Yes.
And that continues this year as well. So what's happening is insurance companies are taking losses and sustaining losses for other lines of business, and they're looking to recoup those losses by either reducing the amount of insurance they can provide for this type of insurance, or they're getting out of the insurance market for rail liability altogether. So we went into this renewal with the hope that we would have a flat rate, a flat renewal. We were able to get a 7% reduction at the first two layers of insurance. The difference with the premium compared to this year, compared to last year, is that that federal cap that I referenced, the passenger rail liability cap, is something that is set for an increase every 5 years. So last year, the amount of insurance we had to purchase was $295 million. This year, it's $323 million. The good news is that we're going to come in roughly flat, maybe a slight increase in terms of the total dollar amount of premium paid this year compared to last year, even with the purchasing of the extra insurance, simply because of Northstar operations. It's a very good story to tell to the insurance companies. We have a very historically safe operation. It's one the insurance companies want to partner with. It's one they want to be in that tower. They see this as a great risk from their perspective. So it's a long way to answer the question, but our premium is going to be a slight uptick, but I just wanted to put that in better context because we're actually purchasing more insurance. So it's really a good story to tell because what we're looking at above those first two layers is roughly flat renewals, and that's what we're continuing to negotiate.
Thank you. Good news.
Any other questions on the rail insurance? All right, seeing none, is there a motion to approve business item 2021-111?
So moved by Gonzalez.
Moved by Gonzalez. Is there a second?
Second by Lee.
Moved by Gonzalez, seconded by Lee. Is there any other comments or discussion? All right, seeing none, can we call the roll, please?
Barber,
Aye.
Gonzalez,
Aye.
Lee,
Aye.
Musse,
Aye.
Ferguson.
Aye.
Thank you.
And the motion, thank you, and the motion carries. Our next business item is 2021-101, which is the ratification of emergency declaration number 65 for the purchase of COVID-19 tests. Bill, I think you're up again.
Yes, I am, Mr. Chair. Thank you, and thank you, committee members. This business item is seeking the council to ratify the attached emergency declaration for the purchase of COVID-19 tests in the amount of $490,500. You can see the attachment there is our emergency declaration form for your review that's attached to the business item. But a little background about how we got to this point in needing the emergency declaration. In the management of the pandemic and the spread of COVID-19, we realized that we really needed to have on-site testing capabilities to prevent an outbreak so that we could continue our critical services. We had a little bit of a scare at one of our treatment plants where we had a potential outbreak, and we realized that if we were to send all of those employees to the state-sponsored testing sites, that the time frame to get those results back would have resulted in everyone having to quarantine, and it would have had a negative impact on that service that we provide. So we purchased test kits so that we could develop a process where we could administer those tests quickly on site. And what we did is what I call train the trainer. We had people that were at the locations that were capable of administering those tests, and we could do that quickly. We could deliver those results or those samples to the lab to get the quick turnaround, minimizing the downtime and the time that people would have to quarantine until those results came back. So we had that in place. We also have a system in place where we can test individuals for possible positives that are asymptomatic. And that's something that has happened, and all that's a part of controlling the spread of COVID-19 within our operations, with the key focus of being to continue our critical functions and our critical services that we had to provide. So we continue to provide those tests. We still have those on site. We're continuing to provide those random testing. We're continuing to provide those in the event that we have a potential hotspot, though obviously with the changes of this pandemic, that is not as prevalent as it once was, thank goodness. But again, Mr. Chair, the proposed action is to ratify the emergency declaration of the purchase of COVID-19 tests in the amount of $490,500, and I would be happy to answer any questions.
Thank you. Are there any questions on this business item? All right, seeing none, is there a motion to approve business item 2021?
Mr.
Yes,
Chair,
Councilmember Barber.
I just
Yep.
want, thank you, Mr. Chair. I just want to let you know that I will be abstaining from this vote.
Great, thank you. Any other comments? Is there a motion to approve business item 2021-101?
Moved by Lee.
Is there a second?
Second by Gonzalez.
Moved by Lee, seconded by Gonzalez. Is there any other comments or questions? All right, seeing none, can we call the roll, please?
Gonzalez,
Aye.
Lee,
Aye.
Musse,
Aye.
Ferguson.
Aye.
Thank you.
And we will note that Councilmember Barber has abstained,
So noted.
and the motion carries. So the first information item that we have is the first quarter procurement summary and M-Cub goals review. Jody and Ashanti and Elaine.
Thank you, Mr. Chair. Good afternoon, Mr. Chair and committee members. My name is Jody Jacoby, and I'm the director of the Procurement Department. I'm here today with staff from the Office of Equal Opportunity, including Cy Jordan, the director, Ashanti Payne, the assistant director, and Elaine Ogilvie, the supervisor of the small business programs, to present this information item on the procurement summary for the first quarter of 2021. The council expenditures policy authorizes the regional administrator to approve awards greater than $500,000 for the purchase of goods and services and $2.5 million for construction. This report, as you've seen before, includes a breakdown grouped by value and procurement type. It also includes M-Cub data. And after the procurement summary, I'll transition to the Office of Equal Opportunity to speak to M-Cub utilization for the first quarter. We'll start by looking at its page 2. It's the high-level procurement summary information, where it shows that in first quarter, the cumulative spend was $274,660,982. There were 9,237 separate procurement events, and those include purchasing card, purchase orders, and contracts executed during the first quarter. How does first quarter of this year compare to last year? In the first quarter of 2020, the total spend was roughly over $255 million, so about $20 million difference. And there were 12,387 procurement events, about 3,000 difference. And the big difference from last year to this year for procurement events was because of the COVID-19 pandemic was just starting. And there was a lot of purchases that were made immediately to help the agency prepare for the global pandemic. The two pie charts on the bottom of the procurement summary page, the pie chart on the left indicates the procurements by number of transactions. That's 95% of the total transaction represent a dollar value less than $10,000, which is also the council's micro purchase level. And micro purchases do not require multiple quotes. And the pie chart on the right represents procurements by contract value, where 92% of the value was greater than $175,000, which is the council's formal threshold for advertisement. These contracts are also included in this report, and then they're advertised in the on the council's doing business webpage. These percentages are fairly consistent as they've been trending quarter to quarter for the council, and also are pretty consistent with other public agency peers locally and nationally. A little bit of specific data is the micro purchase in June of 2020 for M-Cub providers, as you're aware because you helped us with that policy change, increased from 10,000 up to 25,000. And our department's been specifically looking at individual performance data in categories where M-Cubs can do the work and empowering our staff to have those conversations and redirect purchases as much as we can. And we saw a pretty huge increase in the number of M-Cub purchases in that threshold. We also believe there's great opportunity in that area. And so we're working with the HR learning and development team, and we're going to do an all staff in June to really look at ways for staff to practice having some of those conversations to redirect project managers to retrain them on using the M-Cub directory and really have those more challenging conversations and partner, especially the purchasing agents and teams, to get to these very important outcomes that we're looking to achieve for M-Cub. So we're working on that in June and then setting some benchmarks and some better areas that we can track the performance. Some of the other work that's been done by the procurement team in the first quarter is partnering with the Office of Equal Opportunity and some other key stakeholders. Councilmember Ferguson also participated in some of these specific meet and greets to help connect some of the M-Cub providers with actual project managers who are facilitating or buying this service. And so the intent was to help them understand how we do business, to also provide a connection with the project manager to help them understand the M-Cubs that are available, and then just a listening session so we can listen and learn from our providers. We've also partnered with the American Council of Engineering, the ACEC, to host an upcoming workshop called Understanding Both Sides of the Fence. And at these workshops, the council and ACE staff are going to collaborate again to better understand how our documents read, to be more strategic, to help us have strategies to expand our equity and diversity, how to help improve project delivery, and then strengthen the relationships. And then later on this summer, we're coordinating with the Minnesota Associated General Contractors Association to have a similar training. And then today, just as recently as today, we participated in a meeting with the Minnesota Minority Goods and Services Association to really partner to have a stakeholder and a collaborative approach to how we do business here at the council. And then the last thing that was done in the first quarter was implementing service level agreements with each of the business units to not only share key performance indicators from the procurements occurred, but to share information about M-Cub statistics, to talk about some continuous improvement, increase the communication so we can get to those very important contract outcomes. I'd be happy to answer any specific questions on contracts, or I would like to transition to the next phase to, I believe Elaine Ogilvie is going to talk about the M-Cub data from the first quarter.
Thanks, Jody. Good afternoon, Council Member Ferguson and Council members. I am Elaine Ogilvie. I'm the Supervisor of the Council Small Business Programs, and I am honored to be able to bring you the information on where we are landing in Q1 of 2021 with our M-Cub utilization. This is a lot of information, it's a lot of data, and I am definitely going to highlight some of the aspects of this report that are critical and show some of the achievements against our goals, demographics in our achievements, focus areas, and then I do want to share some success stories with you on some things that have happened in OEO with the M-Cub program. So I will start with on page 9, you will see that we are exceeding our construction goal once again. We are at 27.3, and we are at 3.6 with our goods and services goal. Again, falling short in that area, so goods and services will continue to be a focus area for us to improve our utilization with BIPOC-owned businesses. I think Jody spoke to that there is a lot of opportunity in those smaller dollar areas. So that is an opportunity that we will work closely with them to partner and achieve greater results. On page 10, there is a comparison of Q1 of last year to our spending in Q1 of this year. And I just want to note that our spending has decreased in 2021, but our participation has increased. So That's an indication of progress. Page 11 is a breakdown of M-Cub spend per division and department. ES and transit still having the lion's share of the M-Cub participation. That is their major constructions and the goals that we set on those construction contracts is a significant contributor to that participation. A couple things that I want to highlight is a comparison from Q4 of 2020 to Q1 of 2021 is that transportation services is showing that their share of M-Cub spend to be 20% in 2021, which is about 17% greater than what they had in 2020. And also community development is showing their share of M-Cub spend to be, well, it's about 0.3%, $8,000 worth, but that's up from zero in Q4 of, excuse me, 2020. So seeing some definite progress in those areas. Page 15 is the demographics against our spend. One thing that I want to note is that there was an increase in the amount of spend with Black-owned firms from Q4 of 2020 to Q1 of 2021. 21, there's a value of contract value or spend value, I should say, of about $600,000. 24% is where that is landing in 2021, versus in Q4 of 2020, it was only at about 309,000 or 8% at that time.
Hey, Elaine, is that a significant increase with a particular vendor, or is that a number of vendors that we're doing more business with?
There's a limited number of vendors. I'd have to double check again to see specifically if it's the same vendor getting more work or if it is new vendors. So I will definitely have that for you next quarter.
Okay.
Okay, I just want to wrap up with a couple of things that I thought were important. All of the collaboration between procurement and OEO is significant, and OEO appreciates that partnership that we have with them. I do want to recognize my small business team as well. They put a lot of effort and work into being deliberate and intentional in the work that they do. I want to highlight a few things, and I'm just going to kind of go down a list of what I have in front of me. We recently had a new environmental engineering firm in M-Cub, and it was within weeks of them becoming an M-Cub that they were awarded a contract of almost $300,000 as a prime. So very excited about that. Another item that I want to share is that a transit project manager reached out to one of my staff members asking about needing an HVAC contractor, and my staff worked to connect them with a firm that had never done business with the council before, and it resulted in a contract of about $14,000. So that was a direct spend contract. Again, they're taking advantage of, project managers are taking advantage of the increase in that direct spend value. So great to see some activity there. We were able to utilize an M-Cub to rent the furniture for one of our vaccine clinic sites. We are also starting to see procurements going to some of the firms that we have done meet and greets with. So that was exciting to see. And then lastly, I want to share something that is very exciting. As you know, we have a mentor protege program, and currently it's with our construction contracts. We had a very large campaign in 2020 to be very intentional and create some agreements between 3 prime contractors and 3 M-Cubs. And so far the relationships are very successful. I do want to point out one relationship in that we have a prime contractor working with an M-Cub that primarily works on our environmental service contracts. This firm is a small construction firm owned by a Black American male, certified as managed business by the Met Council in May of 2019. In May of 2020, they entered into this Metro Protege agreement with a prime contractor. And then as of March of 2021, they have received $1.5 million worth of work with their mentor. They had not done any business with the council prior to that mentorship agreement. They're just a very small firm. And with that, they have added 7 new employees and been able to purchase some new equipment. So I am very excited to share that with you, to show that growth, and definitely indicates that this is something that we need to focus on and put our efforts into in the future. And with that, I am happy to answer any questions.
Any questions from council members? Councilor Lee.
Thank you, Chair. Thanks, Elaine and Jody. That was a great presentation. My question would be for the event we had today with the other stakeholders. When we have these kinds of town hall meetings, are there particular themes around certain barriers that or challenges that these newer first-time vendors bring up that we might be able to help kind of think through or troubleshoot with them and going into the future?
Mr. Chair, Councilmember Lee, that's absolutely part of the conversation that we want to have to learn about barriers that they're experiencing. There are some things that we can do differently and we should do differently. And so we're always engaging to find out opportunities to make it easier for them to do business with the council. So I really appreciate that conversation, and that's part of the continuous improvement that we're looking at in procurement. And then I know that our partners in the Office of Equal Opportunity are also looking at making those really deep changes to get us to the outcomes.
Thank you.
Any other questions? So, I think it's clear that all of the various things that we're doing are starting to pay some dividends, which is great to hear. And I think it's important for us obviously to keep doing what we're doing, and then just it's the two sides of that, right? We want to increase the numbers of firms that we're working with, but hopefully we have some of these firms that can grow big enough to be able to do multi-million-dollar contracts with us, right? So, if we end up with 5 million with one firm, that's not necessarily a bad thing. But it's just more just a question, just curious, right? Because as we heard from Commissioner Roberts Davis, that they're struggling, especially with Black-owned firms, to have ones that can take larger contracts. And so at 10,000 at a crack, it is really hard to get to a 5, 10, $15 million total spend number. It's a lot of separate purchase opportunities. Whereas if you have some businesses that are able to grow as a result of doing business with us and other entities, then you have opportunities to spend larger amounts with them over time and watch the business grow and have successes that you're referring to, where they're hiring people and buying equipment and able to continue to grow. The Mentor Protege program, is there anything that prevents us from doing more of that?
No, absolutely not. It does take resources in terms of just being intentional and structuring those relationships and following up with them to ensure that, you know, they are on track with what their goals were in the agreement. But no, that definitely seeing the success, I almost feel like it really needs to be continued as a focus area for us. This is real substantial progress and growth for these firms.
Yeah, and finding if there's ways of doing it, because it sounds like most of it's in construction today, right? So,
Currently, yes.
yeah, so just finding ways, if there are ways of you know, expanding that on the goods and services side where we also, you know, we're not maybe having quite as much success as we're having on the construction side, but yeah, it's finding the firms both on both sides of the table that are willing to do it and are willing to commit the time to and effort to make them successful, right? Because just pairing up two people or two organizations, if they're not willing to put the time in, doesn't get us the goal that we're wanting to achieve. So, well, it's good progress, and so obviously we have more work to hopefully continue to see things grow, but it's definitely things moving in the right direction. So, thank you. Our second information item is our quarterly investment review, which we just heard yesterday. So maybe we just do sort of a Cole's Notes version of the presentation we had yesterday.
Yes, thank you, Mr. Chair. This is Mark Thompson. Good afternoon, committee, council members, committee members. I'm Senior Manager of Treasury, and I'm here to provide a quarterly update on the Investment Review Committee. As Mr. Chair mentioned, we met yesterday, and we typically report up to this committee after that meeting. And I have a presentation which you know, we'll give you a little bit of background on the economy and interest rates and what it means for our investment portfolios. And I'll quickly run through it. I know we might not have a lot of time, so I'll try to keep it moving. But you'll see Greg, you can go to the second slide. We'll make sure we're working here. So I'll start with a little background on the economy and interest rates. My first bit of advice is don't look at your retirement accounts today. The market's not in good shape today, but Greg, why don't you go to the next slide, and we'll start with a little economic background. This is all first quarter information. The first quarter was really a solid quarter, and you can see in this graph showing GDP in the far right bar column there is GDP growth for the first quarter. It was up 6.4%, which is strong growth. Compared to, it was up from 4% for the fourth quarter of 20. Economic data in March was really strong. Retail sales were up, manufacturing was way up. Housing starts were at record levels. The only thing that was lagging really was the service sector, and we'll talk more about that in a moment. You can go to the next slide, please, Greg. GDP is, the biggest component of GDP is consumer spending. So I thought this was an interesting slide I would share that, this breaks consumer spending down into two sectors, the goods and the services. And you could see the blue lines represent spending in our economy on goods, and the red lines represent spending on services. And what's interesting is obviously the solid lines are actuals, and the dotted lines are pre-pandemic trend lines. So you can see there was a big dip in spending, obviously, early in 2020. And then, if you look at what was spent in total, the amount of money that's spent on services is twice what's spent on goods, which is an interesting concept to me and shows the importance of the service sectors that have really been struggling through the pandemic. It also shows the goods line, if you look at the blue line, is really recovered, and it did last June. It crossed its trend line, and it's been positive since. Whereas goods has bounced back a little, or excuse me, services has bounced back a little bit, but it's still way below its trend line. Maybe that's because we've all been trapped at home and buying goods, and we haven't been out, the services have been closed. And one of the big challenges in the service sector right now is finding employees as they struggle to come back. So we'll talk about that more in a moment too. Next, Greg. Non-farm payrolls. This is a measure of the number of jobs in the economy. The economy did add jobs in the first quarter. In fact, the March employment numbers were very strong. We added over 900,000 jobs, which is a big number. Most of the improvement, of those 900,000 jobs, 600,000 were in the service sector, which was great. There's some interesting dynamics going on in the labor markets right now, where we have a record number of job openings, which is interesting. We've got 8 million jobs that are open. And then at the same time, we've got 16 million people still collecting unemployment benefits. So it's kind of an interesting dynamic that we have a lot of jobs open and a lot of people collecting benefits. So we hopefully, as the reopening progresses here, we'll see that dynamic and maybe that imbalance correct itself. But generally, payrolls. I mean, if you're paying attention to the financial news, they'll talk about jobs, and the economists are looking for the economy to add 1 million jobs every month. So that's what we're hoping for. Sadly, April was really bad. Those numbers came out last week, where we only added 200,000 some jobs. So it's really hard to predict what's going on, because we haven't really been through this scenario before. So next, Greg. Inflation. This is really the hot topic, especially in the second quarter here. This chart shows the PCE deflator, which is personal consumption expenditures. It's an inflation measure, and you can see in the far right that the red and blue lines are really spiked in the first quarter. Inflation took a tick up in the first quarter and is continuing in the second quarter. I think you've probably heard in the news, we've got a lot of bottlenecks on the supply side of the economy, and increasing demand on the demand side. So we're really seeing prices shoot up. If commodities are really a big piece of that, you see gas prices going up and lumber prices going up, and so the inflation's kind of starting to scare the markets a little bit. We'll talk about that some more in a moment, but we need to keep an eye on that, because it's the Fed is keeping short-term rates near zero, and this may speed up how quickly they increase rates to try to control inflation if inflation keeps rising. So next, Greg, please. This is the Treasury Curve. It's the Treasury Curve is kind of the base for fixed income markets where the council invests, and this kind of shows you where rates were. The dotted line represents Treasury yields at the end of the fourth quarter, last quarter, and of 20, and the solid line shows you where Treasury yields are now, or were at the end of the first quarter. So you can see that really short-term rates, for our short-term portfolio, we're investing very short, 1 year and less, typically. So rates are near zero, as the Fed has kept rates near zero to try to stimulate the economy. But really, that's that 2 to 7 year area. You can see that yields have really increased the past quarter. So that's an area that we invest in our long-term portfolio. So that's good news in a way. So rates are rising. Next, Greg, please. To quickly touch on the equity markets, the S&P 500. The stock market was very optimistic in the first quarter. It was up 5.8% in the first quarter, fourth straight quarterly gain. Tech stocks have been going crazy, or did in the first quarter. Second quarter is a different story, but like I said, the inflation fears are starting to hit the stock market. So the second quarter is going to be a little tougher. And as I mentioned earlier, today the market is not good, the stock market. But so our exposure in the equity market, the council has an OPEB trust where we invest. We have some investments that are exposed to the equity market. So I wanted to throw that in too. But next, Greg. These are some economic surveys. Bloomberg does some surveys. They survey 60 to 80 economists and financial market participants, and they come up with these estimates for some of our economic indicators. The top chart shows, things like unemployment, consumer spending, the CPI, and the PCE. I know these, as we're getting kind of detailed here, but those are inflation measures, and then of course GDP. So this kind of shows you that, most economists are looking for improvement in unemployment and spending. They're looking for, kind of a comeback in the second and third quarters, and then maybe settling down to more normal levels after that. Inflation, I mentioned, the middle CPI and PCE, you can see that they think inflation is going to continue to rise over the next few quarters. And the GDP, you can see, economists are looking for a big spike in GDP the second and third quarters, up to 8% or 7%, and then settling back down to the lower graph is just showing you some interest rate forecasts, and that the Fed funds is set by the Federal Reserve Bank. They control short-term interest rates, and as you can see, they've got the rates they set at 0, and that goes out through the third quarter of 22. And the Treasury notes, the 2-year, the 10-year, the 30-year, you can see those rates are increasing slowly over the next few quarters also. Next, Greg, please. So that kind of gives you an idea of where rates are and what's going on in the economy. So I thought I would jump into now our portfolios. Next, Greg. We've got 3 different portfolios. We have a short-term portfolio, a long-term portfolio, and I mentioned the OPEB trust. And this chart is just showing you the balances in millions of those portfolios over the last 3 years for the first quarter. I'll quickly speak to each one of those. You can go forward, please. The next slide. Yep, short-term portfolio. So the short-term portfolio is used to manage our liquidity and our cash flow. It's invested very short. 9 months and less is typical. At the end of the first quarter, it had $704 million as a balance. It was invested in U.S. Treasury T-bills, government money market funds, U.S. government agency discount notes, and a small amount in municipal bonds. Its average maturity is about 2.5 months. And these charts show you the total return. And for the quarter, our total return was 0.013%, which, outperformed its index. But as you can see, rates are extremely low, and they're right next to 0. So that it's really a struggle for this portfolio to earn lots of income. We're diversifying it, and we're looking for the best yield, but it's really a struggle because rates are so low. And like I said, the Fed is expected to keep rates low, short-term rates low for at least through this year. Greg, next, please. The long-term portfolio. This is our longer-term reserves, and at the end of the quarter, it had $472 million in it. It was invested in U.S. government agency securities, Treasury bonds, taxable municipal bonds, and some CDs for our CD program. And this is a little longer-term portfolio. We invest out to about 10 years, and our average maturity is about 3.5 years. And this portfolio also outperformed in the first quarter. It did have a negative return of 0.548 versus an index that had a negative return of negative 1.77. So we outperformed our index, although the total returns were still negative. As interest rates rose during the quarter, the market value of the securities we hold goes down. That's an inverse relationship there. So that's why we had some negative returns. Those are just market price movements on paper only. We're a buy and hold investor, so we don't realize any of those paper losses. But so the reason we outperformed the index is because we're in a more defensive position than our index. We're shorter. We have shorter maturities, so we're we're not as sensitive to interest rate changes as our index. So we outperformed. Next, please, Greg. A little bit about what we're doing in the long-term portfolio. We're continuing to add high-grade taxable municipal bonds, and locally when possible. This past quarter, we did add about 10 million of municipal bond exposure. And locally, we found some bonds from Shakopee and Egan. So we're trying to invest locally when we can, and trying to add the taxable municipal bond sector has some really good rates right now, and that steeper part of the yield curve I showed you earlier. So that's what we're doing. We're also continuing to add to our CD program. We started a CD program about a year ago, and we have $14 million of CDs with local banks. We're trying to invest in local banks that support local female and BIPOC owned businesses and affordable housing and the unbanked. And we've got some room to add more CDs in that program. So we're evaluating and negotiating with a couple local banks right now to add to that program. It's 14 million now. We're looking to get it up over 20 to 25 million. So, and lastly, I'll just touch on, next please, Greg, the OPEB trust. This is funds set aside for our OPEB liabilities. This has been just a great performer for us. It's managed by the State Board of Investment. And another really strong quarter. The first quarter's returns were 4.26%, which is about double its index, which was great. The average annual return over the last 5 years has been over 13%. You can see we have it allocated amongst 3 different options at the State Board of Investment. We determine the allocation. 63% in an equity pool, 33% is invested in fixed income securities, and 4% is in a cash pool. And you can see the value in the third quarter went up from 315 million to 330, so it went up actually 414.6 million. So this has been a great story for us. We do try to keep it at this allocation. That's our target allocation. Over the past years, the equity markets did really well. Our equity portion did expand and got a little away from our target. So we did make an adjustment this past quarter to bring it back to 60% equity. So we moved some of the funds from the equity bucket into the fixed income bucket to reduce our equity exposure. So that's kind of a quick review of our portfolios. I'm happy to take any questions.
Are there any questions for Mark? Or I'll just jump in. I don't see hands. So, and Mark, you'll be bringing something to this group to add some banks to the approved list in the future.
Yes. Like I mentioned, we're trying to expand the CD program. We add local banks. We take applications from local banks to join the program, and they go through an approval process with the investment review committee. And if they proceed and get approved, we have to add them to the approved financial institutions list the council keeps. So that goes up through the management committee and the council. So yes, there is one bank that we're looking to add that we'll be bringing to this committee as soon as possible. Thank you, Mr. Chair.
Right. Any other questions? All right, seeing none. Thank you, Mark.
Thank you.
So the last item we have on our agenda, we ran out of time last meeting a little bit for our conversation about the workforce and affirmative action plan. And it seemed like people had just some additional questions. I just wanted to make sure that we had an opportunity to talk about that, and I think, and also just to look at sort of where we're making progress and where we're doing well, and then where we might still have work to do, because it seems if you look at the data, there are a number of areas that we have definitely made some some progress over the last number of years. So I just wanted to have this group have a certain opportunity to reflect on that, and maybe have Marcy sort of share a little bit about some of the things that we have planned going forward for changes we're looking to make or things we're looking to do differently to continue the progress that we've been making. So Marcy, maybe start there. Just sort of, what do you have planned that sort of will be different going forward compared to what we've been doing, and then our updates more of the same, maybe part of it. But what are some of those initiatives, and then we'll give council members sort of an opportunity to sort of ask questions as they would like to. So. Marcy, if you're talking, we can't hear you.
I'm here now. Sorry about that. I was just going to be looking for a document that I have that would be talking a little bit more about some of our initiatives. So I know on the very last page of this, or one of the second to last pages, we have the affirmative action. I'll start there. And Ashanti and I both are working together with our respective teams in OEO and HR around our affirmative action plans. And there is also some other work that we're doing in HR, but it all certainly impacts the affirmative action plan. And Greg, maybe if you could go to the second to last slide of this deck. And Ashanti, please feel free to maybe the next one up. There we go. Yeah. Okay. So I'll just talk through this a little bit. We do know that we need to take a look at our retention statistics and how we are retaining women and people of color. And we noticed in both our affirmative action plan from the analysis, that 2-year analysis that OEO did, as well as when we look at our results from 2019 to 2020, that we are still losing women and people of color at a faster rate than their presence in the higher percentage than their presence in our workforce. A couple of things that we want to do is really dig into that data. I know for the human resources part, we combine retirements with voluntary and involuntary separations. And we want to be able to pull that out and disaggregate it a little bit more by race and ethnicity, but also by division. So we can start to have a sense of where are we seeing those separations. We also do exit surveys. However, one of the issues with the exit surveys is that it's been difficult to get them out before people actually leave the property. So we have some ideas about how to get those surveys out so we can get better data about why people are leaving. Also, we'll be creating a tool for stay interviews where managers can really do some proactive work with their employees to get a feel for how they're feeling about their work, what their aspirations are about their work, and so that they can really intervene sort of early in helping people see their path forward in their careers here. We also do an engagement survey periodically, and it's been a couple of years since we've done that, and we're going to be launching that team to redesign the survey and then get out and then analyze the data from the survey results. So we think that these will be some ways that we can get a better handle on what's happening with retention and develop really targeted strategies around retention. At this point, our strategies are kind of broad and kind of hit the whole organization, and we know that there's nuance there that we don't understand at this point. With recruitment, we are continuing to work to improve our sourcing. In particular, we've been just lately got some great resources for identifying candidates with differing abilities through our work and our partnership with Guthrie Baird. Another interesting tool that we're looking at is to create a scorecard about all of the actions we're doing throughout every requisition and things that we're doing throughout the steps of a recruitment process, from where we're posting and how we're outreaching to how we are designing the interview questions, how we're including diversity in our panel members and things like that. So that scorecard is drafted at this point, and we're getting input from our equity change teams, and we haven't implemented it yet, but it'll be a great way for us to be able to sort of measure how are we doing with each recruitment, and then we'll know, where we can improve, because I think it's the intentional actions at each step of a recruitment process that really make the difference. And this way too, we can sort of track that by division and department, and again, that helps us, I think, to have strategies that work for a particular area. Our hiring, outreach, and recruitment, I think that's very similar. What we need to do is to identify in particular communities that we need to outreach to. And I know, for example, as an organization, the Hispanic community is underrepresented in our workforce. So we have plans to get very specific connections to the Hispanic community and other communities where we see that we have issues of representation. I also think that you'll see in the affirmative action plan that we have in particular the skilled craft jobs that are considered skilled trades are ones where we're really underrepresented, both by people of color and women. And so that's going to take a special recruitment activity as well. Now, we're just now beginning to partner with the divisions on creating these plans, because as you know, it depends on the kind of job, to craft the correct, outreach effort. And then with our recruitment sources for people with various abilities, we also are going to be launching, hopefully, I think we're talking about the fall, to launch internship for folks with disabilities. So that'll be a new endeavor for us. I'm going to just pause and see if Ashanti, if you want to jump in here a little bit before I keep moving. With any other activities that we're planning or that you're aware of?
Yeah, I'll just mention a few. And again, thank you, Chair and committee members. Ashanti Payne, Assistant Director for the Office of Equal Opportunity. I'll just mention a couple of things. Some are very, what I would term as basic level strategies. So looking at sources for recruitment and really generating more and better opportunities for hiring managers and HR professionals to direct recruitments to specific sources that have been successful in terms of generating candidates, quality candidates of people of color and women. And then some of the more maybe, I would say, more detailed kind of strategies. One related to promotions, just based on feedback that we receive. We don't want employees at the council to feel like they have to go outside of the organization in order to get promoted. So it's coming up with utilizing some of our current infrastructure and processes that maybe facilitate a promotion of persons of color within the agency. And then I also say that we have some work groups that are organized around some of those personnel actions that Marcy mentioned, starting with recruitment, promotions, retention, and training. And then lastly, I'll just mention the HR managers work group that Todd Rowley and Joyce are leading. It's really been an opportunity to get feedback from other divisions, things that have been working, and I'll just highlight community development really doing some really creative and good things in terms of some of their personnel strategies. And hopefully we can bring some of those ideas and rework them to enterprise-wide.
Councilmember Lee, I see you have your hand up.
Oh, sorry, Chair. That was from earlier. I just forgot to take it down. Thank you.
Okay, no problem.
This is Councilmember Musa. Can I jump in?
Go ahead.
So thank you. I think in terms of working with communities of color, one strategy might be helpful, which is working with community-based organizations that have a deep ties with the community. In terms of the Latino community, I would recommend that we reach out to CTUL, C-T-U-L. They really do this kind of work, connecting workers with career jobs, especially in the in the construction and technology tech area. So I think CTUL will be a good resource for East African community. We can have conversation and who is the best organization to connect with. But I would say this: our current people of color workers are our best ambassadors. So if they feel valued and respected and have in upward mobility, they will be able to go out and recruit. So let's utilize them as outreach ambassadors. I'm aware a couple cases where internal, person of colors applied positions here at the council and did not get it. For I don't know, I can't speak onto the why, but the more our folks who are already inside feel that they're valued and they have a fair shot for getting promotion internally, the more they will be motivated to go out and recruit people for the Met Council. If they are not feeling internally happy, they will be less likely to recruit for us.
Good points, Abdi.
Yeah, thank you,
Just-
Councilmember Musse. Totally agree
just
with
a-
that.
So just a quick question on, so I'm looking at slide, let's see numbers on here, page 4. So one of the things that we, when you look at sort of where we are compared to the metro workforce, right? So there's 23.4% people of color broadly, right? So in most of our divisions, we're ahead of that pace in the workforce. And then the managers of color, that's always been one that I think some people have sort of questioned where the 12.3% is that, because is that based on who's had an opportunity to be a manager, right? Or is that based on their age and the fact that they were never given an opportunity throughout their entire career? It's not really held against them. So that would just be one just to think about what is that right number in the manager piece. I know that number's been used before in other circumstances when people look at the corporate environment and the lack of people of color. And obviously, Wells Fargo's CEO, publicly said the reason why they don't meet their diversity goals is there's not enough talented people of color to work for them, which he later walked back. But that was what his original comment was. So, so it just, I think we just want to be careful as we think about that and just make sure we're looking at the number correctly. But when you look at sort of the overall numbers of people in the population and how our workforce matches up to that, I think we are in pretty good shape, overall. And I think the areas that you've highlighted are the ones that we know we need to work on, which is finding more opportunities, and I've just sort of referred to it, but finding more opportunities to promote people that we have internally already, making sure that they're having the getting training, getting this, the upskilling, the other things that they need so they're ready for that next job internally and not leaving the organization to go somewhere else, because we've got a pretty good base of employees. Now, the key is really to keep those employees and prepare them for that next role and that next opportunity and have them believe and really want to stay here and continue to be part of this organization. So I think that, you know, when we look at it, and even if you look at, again, depending on what you believe is the right number for that, the manager number, right? Overall, we're probably in, you know, we're above the 12.3%. We're not at the 23.4%, right, for managers, but we are probably, if you compared us to peer agencies and peer companies in the region, we're doing fairly well. And, you know, but we can continue to obviously continue to work on that. But I do think it's, you know, at times it is good for us to sort of look at, you know, where we're at compared to some of those, where we're at. And I think the data that you provided on where we've been is very helpful as well, right? So, you know, we've made a lot of progress. We're looking to make more progress. But when you look at the numbers, we have made, in many cases, we've made fairly significant progress in a lot of these metrics that we're tracking. So I think it's important to note that progress that we've made and the work that is ongoing, and not feel like we need to necessarily you know, start from the beginning, right? Because we are making great progress, and we have a lot of different things that we're working on. So, and my sense is that we know the areas that we have a pretty good idea of the things that we need to work on, right? The areas that are kind of that you've highlighted very well, the areas that have been challenges for us over the last few years. So, anything else you need from that we could be helpful with? Obviously, you have a lot of council members that are very connected in different communities. Anything that we can do to help help in some of this work, and then just in that thinking as well, is there, you know, what kind of mentor protege kind of environments do we have for some of our employees to be able to get upskilled and to be able to learn the things they need to learn for that next job, or to move into management, et cetera.
Well, Chair, I really appreciate the offer to help, and I think that because we have such a diverse council, thoughts about, and Councilmember Mousse brought up some ideas. You know, where are those community-based organizations that you might point us towards? I think that you're absolutely right in that, or Councilmember Mousse is absolutely right in that. You know, how people feel in this organization, you know, really is they're gonna translate that to, you know, recruit for us, to be ambassadors for us. And it is pretty interesting when you look at our applicant data, that a pretty large percentage of our applicants are referred by family members or who are council members or council employees already. But I think that, you know, anything we can do sort of organizationally to say, who are we, and how can we connect more strongly with the communities? So you all are all across, represent the whole region. And I think any kind of areas where you see we should have a stronger presence or could have an opportunity, to let us know. You know, our workforce development department, along with the Department of Office of Equal Opportunity, you know, has some really good connections. And we know too that, you know, workforce development is all about, you know, really specific jobs and working with community-based organizations to help with that pool of candidates for those development programs. But I think, you know, what I would like to see from the HR standpoint is that we're tapping into those partners and those organizations more broadly, not just for development programs. So I think there's some, like you said, there are things we can work on. We know what some of those are. We are trying to use our mentoring and development programs more strategically as well. We have a pretty robust set of certificate programs for first line employees to develop for being ready for leadership, for first line supervisors to be, you know, really skilled so that they can be ready for the next level of promotion. We have did I say the Mentoring Works program, and with with COVID, we've gone to more of a virtual format, which has really allowed us to almost run that continuously. So we're starting a new cohort of mentees every quarter. But I think what I'd like to see more of, and we've been working with our learning council, or we'll be actually having a special meeting with them in early June about how can we help managers steer people toward those certificate programs and the mentoring program. We have a leadership academy at Metro Transit for first line employees into first line supervisor positions, but are we, are we steering people to those, right? At this point, it seems like, we open up and people sign up as they're interested, but I'm not sure that we have enough sponsorship of our people of color and women to say, here's a program. And then once you've completed the program, let's talk about an assignment to help you really use some of the things that you've learned. And so we have to be, I think, learn deeper skills for mentoring and being an ally for employee development. And that's what I'm really trying to push in 2021. Ashanti, I bet you have some thoughts here to add.
Yes, what I will say is, as I begin to talk to various groups and understand, I'm a big proponent of employee resource groups. One, because it creates the space and opportunity for that mentoring, and whether that be on a formal or informal basis, with that option and choice, and then also the opportunity for people to hear stories of success, perseverance, um, you know, best practices. So that's one thing that I think was an important step uh, for the organization in terms of establishing the framework and the process for the formation of our employee resource groups, because I think that's important. And then as well, in terms of you know, really to kind of get back to Councilmember Musse's point about community-based organizations, enriching our pool of recruitment sources, and actually giving those tools in a format for hiring managers that they can easily access and have at the ready. So those are some of the things that I think that are going to be important in terms of those two issues.
Mr. Chair, can I chime in quickly?
Go ahead, Councilor Musa.
Also, I will recommend that we also focus on the diversity of hiring managers, because sometimes that may be a barrier. If all the hiring managers are, not diverse, sometimes that may create unintended biases, or maybe folks can reach out to their own network instead of really going to a wider pool. I'll just, leave it at that.
Okay. I
Yep.
think that makes sense.
Good point. Councilmember Ferguson,
Yep.
I would like to just comment too about this 12.3% managers of color in the workforce. And I think that organizationally, we talk sometimes about, and I think this is an important goal, is that, ultimately we'd love for our manager population to be reflective of our employee population. So, but we don't have a specific, affirmative action goals are kind of based on the workforce, right? What's available in the market. But I think, and maybe Ashanti can help me with this, but, we also, we not only draw from the metro labor market for manager positions, we at least 20 or 30% of our manager hires come from our first line, from our employees. So, so we really should be higher than the metro workforce because we're higher in our population, you know, as a whole, as an organization. So I don't set that Metro Workforce Number Manager of Color as the goal, but simply as one comparison. So Ashanti, maybe you could add something here on this, I'm sure.
Yeah, and I'll just add, and Marcy's heard me say this many times. One of the things that I'm always cognizant of, and I bring to the conversation, is that, you know, we're in a region that is woefully underperforming in terms of racial disparities, and
Yeah.
so I think it is a good thing that we are above the labor market, because we know that there are economic, educational, and other factors that lead to the determination of if you are in the labor market itself. So the fact that we are not uh, um, demonstrating the vast disparities that are represented in the labor market in the region as a whole is definitely a good sign, and definitely something that we should be cognizant of in these conversations and as we move forward and build these strategies, because we want to be a leader, and we want to be in an organization that kind of leads the way in terms of eliminating those disparities.
Mhm.
This is Councilmember Lilligren, and I'm sorry I'm joining this late, so I apologize to everyone for that. And so I caught most of this, and so if my comment is duplicative or repetitive, I apologize. Or if it's irrelevant, I apologize for that too. But I really want to lift up what Councilmember Muse said about the hiring manager, the actual authority, and just briefly share two examples of my own experience that really reflect the importance of getting to the implicit bias that may be happening in hiring decisions. And one had to do with Jerry time on the Minneapolis City Council. Some of you may have heard this already, but we were on a mission to diversify the participation on our boards and commissions. We took a years-long process of just kind of tidying up all the record keeping around that, and then had some really, really good strategies for outreach to diversify the applicant pool. We diversified the applicant pool by 30%, but once the city council voted on the final appointees, we actually decreased the diversity on our boards and commissions. And so the outreach piece and all of the strategies worked really well, but it was really the appointing authority that was the problem with the lack of diversity. And another, and this doesn't relate as much, but it does help illustrate, this is years ago, I was subscribed to Opera News magazine, and there was this incredible article in Europe where there's a very organized workforce, the opera workforce in Europe, and there were issues about diversifying the members of opera orchestras, and the people who were the hiring authorities, the hiring managers, were convinced that there was no implicit bias and that white men were just the best musicians, and so they started to do blind auditions behind a curtain, and instantly the proportion of those hired reflected the proportion of those auditioning. And so I don't think we can, I think that the point that Councilmember Muse raises is a very good one, and I think that would probably be a great area to focus efforts for reform.
Thank you, Councilmember Lilligren. I totally agree with you. It's really interesting that we did start to do, we're calling it masked SME reviews, so subject matter expert reviews, and that's one of the first steps where hiring managers looking at all of the qualified applicants, you know, the ones who meet minimum qualifications, which is a very, you know, we work to screen people in, not screen them out, but when a hiring manager looks at the pool, then they don't have any of those identifiers. And so that's been helpful to I think, to get a more diverse you know, the first interview pool is more diverse than it's been. I do think too that this recruitment scorecard idea is one way that we're trying to get at the hiring manager, who you know, the person who's doing that, making those decisions to get their buy-in, and they're paying attention to how they're showing up at every step of the hiring process. Because it's not, you know, it's not just HR that's doing this work, right? I mean, we're helping the managers, and they're the decision makers. So we're trying to do that. We do just put together a tool to review at the very first meeting with any interview panel the unconscious bias material. We did also launch unconscious bias training for all council employees, and I think we had a 97% completion rate of those who were assigned this spring. So we're in the infancy here, I think, in terms of really helping people be aware and being deliberate about how to think about that and talk about that right when it's important to do. We're also trying to diversify those panels, those interview panels, which we think helps us with the hiring, because it's not a single person that's making the decision. It's really a panel. There's more input, and so I think it gets us a broader perspective on any single candidate. And I remember, I'll tell you a quick story about a candidate pool that I was a part of, watching a panel, and I remember that there was a you know, just in the conversation about a particular candidate, and there was this, you know, one panel member said, well, I just feel safer with him, with this particular candidate, right? And so that was, you know, an opportunity to be able to say, now, where is that coming from? And let's talk about, you know, what does this feeling of safety come from? And, you know, we you know, let's get back to the knowledge, skills, and abilities. And then let's talk about, you know, what kind of, you know, what's missing in our current work group that we can augment with the perspective of someone who doesn't look like us, right? Or have perspectives the same, think about things the same way as we do as hiring managers. So it's interesting. I think it's something that we have to work on multiple levels, really all the time, if we're going to make progress and keep making progress.
Any other thoughts from council members or questions?
I think I already used all of my time, but I'll add one less than 1 second. I'll just say, you know, candidates of color, when they apply jobs with us, they're already starting with a deficit network, so they don't have that many professional network like others. So, you know, it's really important that we do everything we can to make sure that we make every effort to help them succeed, or at least get a fair shot. I know we're trying, but sometimes the system works in a very slow motion that may not, you know, produce the result that we intend, despite our best, you know, intentions and efforts.
Yeah. It's a good reminder. Thank you.
Any other final thoughts or comments? Marcy, we do this update once a year, correct?
Correct. Councilmember Ferguson, we do publish at the mid-year point and the end of the year workforce data full report. It's on the Human Resources MetNet page. It's got a lot of data. It's really thick. So you can see data. You know, we'll probably publish this workforce data report again late July. The other thing that's happening is we are building a dashboard that will be people will be able to access, and you know, we're hoping to have a good mock-up of that by the middle of June. But then that's going to be another place where, you know, we'll have more access to disaggregated data about our employees, as well as other equity-related information such as the M-Cub and some of the strategic equity activities of the council will be characterized on this dashboard. So I think more to come. You know, if you're interested in data, you want to hear data more frequently than we're coming before this group, that will be available. Plus, we can always come back, you know, sooner if once a year is too little. So.
Great. Any other last call for questions? All right, seeing none, and that was our last business item that we had on the agenda. So we are adjourned. Thank you.